Hello guys, welcome back to another video. In this video, we're going to solve the MCQs, the 1 mark question from part B. This is from the CBSE Sample Question Paper for Accountancy 2024. If you have missed out the previous videos, do check them out. The entire playlist is in the description box below, and the link to this paper you can find there as well. If you don't want to miss the future videos, hit the subscribe button and the bell icon so that you get notified whenever a new video is shared. Without further ado, let's get started. Freedom to choose of method of depreciation refers to which limitation of financial statement analysis. All right. So the freedom to choose the method of depreciation, is it limitation of historical analysis, qualitative aspect ignored, not free from bias, ignore price level changes. So in this case, the answer would be number C, because the choice of method can have bias involved. There may be a bias there because the owner, the businessman, might choose a method which can show a higher profit, or if he chooses a method which will increase the depreciation amount every year, then that will in turn reduce the profit. So that will have some biasness involved, right? So that is the limitation in the choice of method of depreciation. Let's move on to the OR question here. That is, dash is included in current assets while preparing balance sheet as per revised schedule 3, but excluded from current assets while calculating current ratio. Now this is an important question here. If you understand this, you will be able to do a similar sum if it comes as a part of ratio analysis. And the answer to this is number C, loose tools and stores and spares. So if you remember, the formula says current assets for current ratio, current assets excluding these, right? But these are very much part of current assets in the balance sheet as per Schedule 3. So if you have a trick question here in the ratio analysis calculation, you should remember that you have to exclude these from the calculation of current assets as a part of current ratio calculation, right? So very important concept question here. Next question that we have, debt equity ratio of Dhamaka Limited is 3 is to 1. Which of the following will result in decrease in this ratio? So debt equity ratio, in this ratio the debt is in the numerator and equity is in the denominator, right? So in order for the ratio to decrease, either the debt should decrease, right, or equity should increase, then only the overall ratio will decrease, right? So let's see which of the conditions fulfill this. Issue of debentures for cash 2 lakh rupees. In this case, the debt is increasing, right? The debt is in the numerator. If debt is increasing, the overall ratio is increasing. So this is not applicable. Issue of debentures of 3 lakhs to vendors from whom machinery was purchased. Again, you are issuing debentures and no impact on equity in this case as well as in the previous one. So this is also leading to increase in the ratio. This is not applicable. Goods purchased on credit of rupees 1 lakh. Here, none of the ratios are impacted, debt or equity. Point number D, issue of equity shares of rupees 2 lakh. Straight away, this is increasing my equity, which is denominator. So overall ratio is decreasing. Number D is the answer, right? That is how you have to understand at a concept level. Question number 29. Statement 1. Sale of marketable securities will result in no flow of cash. And statement 2. Debentures issued as collateral security will result in inflow of cash. Statement 2 is incorrect straight away because debenture issued as collateral will not result in inflow of cash because these are just given to bank as collateral. It is not issued to the public or to anyone. So no cash inflow happens here. Statement 2 is incorrect. Statement 1, marketable securities is considered as part of cash and cash equivalents, right? So if you are selling this, cash is coming in. So actually, in terms of cash, there is no inflow, no flow, right? Because marketable securities is already part of cash, cash and cash equivalents. No flow of cash is resulted because of sale of marketable securities. Is like one component of cash is going out and cash is coming in at the same time, right? So statement 1 is correct, statement 2 is incorrect, which is answer number C. All right. Or question we have, what will be the effect of issue of bonus shares on cash flow statement? Now for this you have to understand, when a company issues bonus shares, it is not for cash. It is issued out of company's reserves, right? So when bonus shares are issued, it does not affect any cash, so no cash flow. The cash position remains the same. Let's move on to the last question that we have. Aditya Sunrise Limited provides you the following information. We have, as per the statement, 10% bank loan, and as you can see, at the beginning of the year, the company had 1 lakh worth of bank loan, but that was repaid at the end of the year. Repaid, right? Nothing is remaining. We have additional information given to us. We are required to calculate the cash flow from financing activities. Let's do it one by one. From the top, let's start. So here, as you can see, there is an outflow. The bank loan has been repaid. So negative 1 lakh. Okay. Point number one, equity share capital raised during the year 3 lakhs. A positive inflow of 3 lakhs. So net effect is positive inflow of 2 lakhs. Okay. 2%. Point number two, 10% bank loan was repaid on 1st April 2022. That means the loan was repaid at the beginning of the year itself. Whenever a date is given to you, it is for the purpose of interest calculation. Now, since the loan was repaid at the beginning of the year itself, no interest to be paid because the money was not used during the year. It was repaid at the beginning itself. Interest doesn't come into picture, so we still have positive 2 lakhs. Point number three, dividend received during the year was 20,000. Now, this is an investing activity. Dividend received is cash from investing activities. This would not come here. Point number four, dividend proposed for the year 21-22 was 50,000, but only 20,000 was approved. So, if 20,000 was approved, that means company paid this in the current year 20,000 as dividend. So, outflow of 20 from 2 lakh we will subtract this 20,000, so we have the net amount as 1 lakh 80,000. In that case, D is my answer. All right, hope this was helpful. If this helped you, hit the like button. Do share with your friends so that they can get benefit out of it as well. We'll catch you all in the next video. Stay tuned. Thanks for watching, guys.